Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hi, Dale. It's good to see you.
Hi, Maggie. Great to celebrate Sir Isaac Newton's Gravity Day.
Yeah, everything comes back down to earth. And boy, it was certainly the case today. It was sort of the everything sell-off. And last week at the end of the show, we were just going over, what we discussed last week, and you said you wouldn't be short volatility going into the weekend in through this week. And boy, we are certainly seeing that so far. We've seen some big intraday swings, not only the sell-off today, but big intraday moves.
Yeah, so it was last Wednesday. It's this candle right here. So I saw a 3 drive and a wedge, and then if you look at it long term, the old lows were, back in 2025 with the market making historic highs. And even this year, late last year, we didn't take out those lows with a melt up. And then things started getting quiet and complacent. And the formation was, my market tell that it was building up compression. It could come out of here. So I don't think it's over. What I think is even a possibility, which would throw off how deep I thought the correction was going to be, but we could have a move up towards 40 and challenge this fix high. And that's not what people aren't looking for it. And they're saying there's a lot of puts, but I always draw speed lines to see where a market could get to in an extreme. And, this on the daily, 4 hour, that move in VIX, you have at least 2 drives here. So I think there's more upside in VIX, and that's probably in tune with the 10% correction I was calling for in the S&Ps. We're about halfway through it.
Yeah, when the VIX is moving higher, it means something bad's happening usually. Hey, everyone joining us live on Substack, X, and YouTube. Great to have you with us. Drop your questions in, and we'll get to as many as we can. And if you are not a subscriber, please hit that button. We appreciate your support. So if the VIX is headed higher, the fallout mostly in equities, or are we kind of looking vulnerable in a lot of places? Let's start with equities. Is it concentrated in semis, because those were the big winners on the way up? Are we going to see?
Well, it's pretty broad based. Semis aren't any worse yet than the general market sell off. Maybe a little bit. I mean, there's some that have really taken hits, like Micron. But the S&Ps, my initial target was around here, 7,100, which is the throwover line. And I was expecting by the time this correction ended, we'd be around 6,900, which is a 200-day. Now, if some of the other markets are harbingers for what's going to happen, a lot of 200-day moving averages have been broken. You had gold break its 200-day. People were hoping it would hold it here. So it gets pretty ugly when it breaks its 200-day. Silver broke its 200-day. So there are things under pressure into an acceleration phase. So, the bull case in S&Ps is we pull back to 6,900. That's a 10% correction, a fib retracement of 50%. That's reasonable. 200-day comes in there, so maybe down here, this could be the end of the correction before a resumption of the uptrend and melt up. I do want to say one important thing is you start off looking just for a correction, but you never know what it could turn into. It was reasonable up here to say, no, we're not going to crash, but the market's way overdone and we're due for a pullback. Fib retracement halfway back, WD Gann like 50%. If it was good enough for him, it's good enough for me. But if we ever take out these lows, the March lows of 6,300, then I believe that the bull market is over. That this longer term wave is over, and we have a lot of downside. So, this is going to be pretty telling. And almost every new Fed chairman comes in, there's some type of crisis. Even Greenspan, he had the 87 crash not too long after he became the new Fed chair. Then Janet Yellen had the dot-com bust, and Bernanke had the Great Recession. Powell escaped it, but he was going down the wrong road in 2018. It was tightening, and that's when Kramer did his rant. You don't know what you're doing. You have no idea. And then he met with Yellen and Bernanke in reverse course. So Warsh may not be a market put. He has it's going to be different, much different with Warsh. I know why he was put in there, but I think it's going to be difficult, especially if this happens. So I think a lot of people have fallen asleep in the oil market because they've been long. It's been a 3-month war. This is a weekly chart. And everyone's saying, oh, they're just not going to let futures go up. It's not worth the risk because you have sharp sell-offs. And I can imagine a breakout over 100 that could take us to new highs in energy. I think people are asleep. The oil shares had nice corrections. They pulled back from, all the, hype and everything. So, I think there's a chance that there's another wave to the upside. And closing over $100 is both psychological and technical. So I'd watch that.
Yeah. I just want to flag, I don't know if everyone, hi, Kevin on Substack. I just want to flag that Nikki Haley was on Bloomberg Radio for an interview today. And she was adamant, and you'll remember, aside from presidential aspirations, she was at the UN for the US and was, sort of, in the Trump circle for a while until she ran. And she still walks a line, I think, tries to walk a line. But she said that when asked about the situation, that Iran, in her opinion, Iran will never sign a deal. They will never agree to a deal. They will never agree to give up the uranium. They now, understanding the leverage the Strait of Hormuz offers them, will continue to pursue that despite all the back and forth. And she sees that as classic Iran negotiating style. And against that backdrop, she thinks the only option the U.S. has is to win, is to finish the job that they started. And so she's kind of looking past the back and forth verbal jawboning. And if that were to happen, that means military action, troops on the ground, boots on the ground, Cargill and all of that.
Yeah, that's a big, that's it, boots on the ground. That's going to be the big difference. And maybe that's why we have a draft starting at the end of the year.
Well, Congress still has
we talked about that.
Stamp on that. Yeah, but it got people nervous. And then you're right, it's sort of that all faded. And every day we hear that we're closer to a peace deal. But I thought that was kind of a sobering conversation to listen to. Now she's outside the administration, obviously.
You know what? The Iranians feel the same about us. That they can't trust a deal with us.
Yeah. Well, this is
I've been saying, how do two sides that don't trust each other ever come up with a deal? That most deals are done when someone withdraws or someone wins. Not in a stalemate.
But I think, I think there have been agreements when the two sides still don't trust each other. There's more to lose than staying, by getting out with someone you distrust than staying in it. Todd has a very different opinion. He said, disagree. The other option is to just leave. Boots on the ground would be a huge mistake. And I think, Todd, you're putting your finger on exactly the debate in Washington, in the markets.
Yeah.
There's disagreement about the wisdom of getting involved. There's disagreement about what you do from here. And I think the market has been going back and forth as people who understand the region, who are very knowledgeable about these things, fundamentally disagree on the way forward. So it's been very hard to handicap. Now, we've talked about this, Dale, and you watch the market action. This is why you just said it's not in the market. The market believes that there, as ugly and twist and turning as it is, that somehow there's going to be some sort of resolution, because it's been really hard for oil to push higher. Now, I know there's reserves being released and a lot of things being done short term, but if they're wrong, if the market's
We're running
wrong,
out of reserves.
yeah, well,
that's the issue. And the straits are still closed.
Yeah, loads of oil. People who watch the market closely were warning about this summer period hitting a danger zone. I will tell you, I had a really interesting conversation. We're going to release it tomorrow for Substack and later parts of it on YouTube with JJ John Johnson who writes as Alyosha on Substack. He's not so sure the oil math is right. He has a very contrarian view. So even when it comes to the supply issue, there are very, very different opinions. So just watch yourself. He thinks oil's going lower. He thinks there's enough oil. He thinks there's enough energy. But again, this is
right.
Very right. This is very, very, very difficult.
So I know that you and I talk about these things, and they're great to talk about at a cocktail party.
You got to trade it.
What the key is, making things actionable.
Yeah.
And having reasons to take positions in the market, which you cannot do simply with a narrative.
Right.
Okay. So you still need some type of timing and risk structure and, debates about whether oil's going up or down.
Yeah.
What's the difference? The difference is, are you long or short or flat? Right. If you don't know, and that's okay too, to be on the sidelines and say, well, I'm just going to let the market tell me.
Yeah.
If I get a breakout over 100, I don't care what someone's bias or narrative is. That's a buy signal.
Yep. I think that's exactly why you have to really understand, first of all, your risk tolerance and what kind of, are you an investor or a trader, and time frame. What time frame you're operating in. Here's a question for you, Dale. If you are, so you're going to look at what the chart tells you and move with oil. Would that create fear that spreads beyond the oil market? If we saw oil spike, does that bleed over to other markets?
Oh, well, I think that, other markets are under pressure already. I can't, and, they're just like maybe not, but I think the bad sign for the market was we had at least two big down days in WTI, which would normally be supportive for equity prices, and the market still sold off. To me, that was a big tell. So what should have been a tailwind had no support for the market at all with crude down.
Right. So no support with it down, but one has to wonder if it adds to the pain if it spikes.
Well, sure. It will, because rates have kind of stabilized a little bit. And if that happens and we have 140, 150 oil, you're going to see the 10-year start to move towards 5%. You're going to see the dollar continue to strengthen. I'm still a believer that the dollar hasn't even had its big breakout yet. It's on the verge, but it had a very strong day Friday. So, we've talked about the dollar being the key, and it hasn't been dramatic, but it's been enough to drain liquidity from things like the precious metals, and even soft commodities have been under pressure, the grains. So I really don't think the whole overall market, it's all one market, precious metals and stocks and everything, tech, everything's going down together. And I don't think you get a real good turn in the market until you see this dollar rally peak. And I still think it has legs to well over par towards 103. I've been talking about for about, a decade. It feels like a decade.
It feels like, you've been patient and waiting. So you've been talking about the importance of the dollar. Dr. Divergence also made a comment the market cannot bottom without capitulation day. The advanced decline line shows that we are still rotating. We need a clean out. And I feel like if you feel like you're getting it, and then, we talked about some of the big reversals you've seen, even on days we ended lower, you kind of, clawed back part of it. You have people who are coming in buying that dip.
Well, I'll tell you what, yesterday was very revealing in the S&Ps because they really tried to make a stand. We were down sharply yesterday and it was this candle. All right, so this was a low, and then by the close, we had recovered it all. And the key is, people that use moving averages, Friday's low and Monday held, right? The 50-day moving average. And it was just a fib retracement off that break to sell, right? Right here. This was, it bottomed. Here's Monday. And we rallied a little over 61.8 back here and then had this very negative day, but it tried to recover. And now it's giving up the recovery. So the action's not good. Okay. And if the 50-day gives out, it opens up the door for the 200. And that's right around my target at 69.
Jane J is asking, what does Coach think about the more defensive sectors of the market? Could they rally with a falling S&P and rising dollar?
Well, I'll go with Dr. Divergence right here and say that we need a cleansing event. And, there could be some that buck the trend. Maybe there'll be energy, if I'm right. I mean, if oil breaks out over 100 and nat gas, although we've pulled back a little bit, it's done nothing wrong except move sideways. It's still well off the bottom. So yeah, there might be some rotation into oil, but also part of the liquidation, like you were talking about earlier, Maggie, is that people are selling stuff so they could participate in the IPO Friday.
Oh, I know. Listen, we got through halfway through the show without talking about SpaceX. I mean, it is just sort of sucking up all of the oxygen.
Well, I was a big fan of the Jetsons, okay? Their dog, everything he said started with an R. So he would say, "I love you, George." You remember. That's what
I remember.
All right. So
I remember. I'm waiting for my flying spaceship. I think that I feel like, we thought it was.
Well, you get that after Disclosure Day when they, the movie, and they come and they take you up to the ship to welcome.
Some days I feel like that's already happened.
Yeah.
But yeah, no, I mean, it is. And, this is another one of these. So let's connect it to the market first, because we can debate all day about SpaceX, and that's happening elsewhere. But again, there's chart action and the things you focus on, which is what happens from a trading perspective. And then there's the larger themes of, do they get it right, and what happens, and is this the future? But that, I think there's a lot of FOMO. There's a lot of concern about what it does to the rest of the market. Do you think we're seeing selling in order to raise money to participate in the SpaceX IPO?
It's possible, but there were also people that were waiting to get out of the market until the IPO, and they're already 6%.
So they see it as a top, and they're
emblematic. It could still end up being emblematic, but this should be setting up great buying opportunities. I'm only talking about another 5%
in that gas, right?
No, in S&Ps.
Oh, in S&P. Okay.
To 6,900. So, that's not that far away. And, it's not only the price, it's how it gets there. If we just crash through 7,100, that would give me a different message. And if, at least we get some stabilization. And actually, if I didn't have a bias about a melt up, I would say this would be a bearish event. Because if you look at that line, it's a throwover of a wedge that we broke out of and accelerated, and it really shouldn't close back under this, or you could call all of this like a false breakout. So 71 is going to be a real interesting test. But, I just went with a regular fib saying this was impulsive, very strong move, and it has to pull back 50% before it goes again.
Why
So
are
I'm
you so
going with him.
convinced we're ultimately going to see a melt up?
Because I think that the dollar is going to peak, and I think eventually, after one more spike up in rates, that the Fed is going to be easier. They're going to start to ease, and probably the war will be over.
Yeah. Someone very wise I was just talking to said, listen, it's so hard to see it in the moment, but wars end. There
Yeah.
is an end, right? And so, I mean, listen, these days we're looking at Ukraine and Russia, you could have said the same thing, and that is just dragging on with terrible, terrible costs all around. But I thought that was sort of interesting because it's easy to feel so gloomy and negative based on all of the headlines. We were talking about nat gas. I just want to stay with energy for a moment. Hugo's asking, can you chart uranium, specifically LEU? So I think we'll do one or the other. You can look. I don't know if you're looking at that's Centrus Energy Corp. I don't know if you want to look at that as a proxy.
Well, I usually look at Cameco, but I'll look at this.
LEU.
There it is. Looks like it wants 101 here. That's a weekly.
Is that lower from where it is now for those who are listening and can't see the chart?
Yeah, because, they're on the sell-off, it's, unrelated things. It's more about liquidity right now. So people are raising cash. They started in Bitcoin. And if you recall last week, I said people talk about that Bitcoin is no longer a good indication of liquidity and correlate with the NASDAQ. And I said, you know what? Sometimes correlations, they separate, they break apart, but I still believed the message that Bitcoin was giving. And that there would be a reversion, that it would catch up with the market for at least a correction, which is now underway.
Yeah. What is the downside?
Uranium holds, everything. Here's Cameco. I looked at that too. Look, breaking the 200-day moving average. So that doesn't look too good to me either.
Yeah.
Maybe this is saying that the gentleman you interviewed is right, and oil's going to break down and not break out. Because you would think if oil was going to break out, people would be there'd be money flow into alternatives. But I think Dr. Divergence has it right. It doesn't matter what you're long right now, that we're in this cleansing cycle, and the hope is it's a correction, and all these things that look negative now are setting up real good buying opportunities. Maybe by the solstice, it's only 10 days away, but Gann believed a lot, looking for turning points. So if things are going down into the solstice, you could look for potential lows, and if they're going up, you could look for peaks.
Dr. Divergence said, Coach and Dr. G heading to the World Championship in doubles trading. Oh, you better believe it. When the two of you are agreeing on something, we all need to pay attention, given both of your many years of experience. When you talk to gold people, they'll say something similar, that this is shaking out the more speculative, shorter term people, and the sort of, steadier, longer time frame hands that are interested are going to see this as a buying opportunity. Now, people may disagree, but this is all about your time frame, right? I mean, so
I don't know. I think it's about price too, because your viewers know I've been bearish all year. So if you were just saying long term, well, okay, I'm long at 5,000 long term.
At the right price.
I'm down 25%. Or everyone, look, you could go back on Maggie's videos, and there were many rallies that I said to short. I'll also admit that I was early on the top, but once we had the top, for the last 7 months, I've been giving fib points for where you could sell rallies. And if you notice, this was the best rally. And once we had this wash to this low, I drew this parallel which for months has been projecting under 4,000.
Mm.
So when I was talking about gold under 4,000 here and even here, there were people that, just, well, Dale, you're always bearish. And the same thing with silver. There were great since the end of the year. There have been different areas. The recent one that broke down was a 70 support. And for months, it could never get over this pivot at 78. People were aware of it. And I've been talking $50 silver for quite some time. I think we're going there. Maybe in a hurry.
So it's important. So that's a really important point then, Dale, because even if longer term you believe that you'd like to have part of your portfolio, you're going to have the opportunity at a better price if you're right. Entry points matter.
I mean, look, Maggie, you and I did some selling up here of physical. And I know
I didn't.
I thought you said you did, but I did.
I wish I had it to sell, Dale.
Yeah, I didn't catch the top, but I sold half my physical in this.
Yeah, that was an amazing trade.
Now it's a 50% sale.
But you said at the time, if I'm remembering, that sometimes, I think this was you, sometimes it's good to not feel the need to do something all the time, because I think you sat on it because it was inconvenient and kind of not forgot about it, but just didn't get around to it, and were able to really benefit from that parabolic move, right?
Yeah, I was long from $20 an ounce only a year and a half ago or so. And it turned out to be my best trade because it was inconvenient to go to a dealer.
Yeah,
when you're used to clicking a mouse. So
sometimes friction's not a bad thing.
Yeah,
holding back our
I was too lazy to screw it up. How about that, Maggie?
Yeah, I think Rick Rule has a similar story, by the way, and that's saying something, because he follows it. Yeah, it's a funny. Ian, someone said people are in the euphoria phase right now, and Ian said it doesn't sound like it in this chat. You're right, Ian, because I think a lot of you are doing really hard work and trying to stick to your framework. And if you're listening to Coach every Wednesday, paying attention to and Dr. Divergence, paying attention to what's going on. So I think you're all an outlier. I think there's a lot of retail enthusiasm. But here's the thing, Dale, this is going to be the really hard part. And Brian asked, are you a believer in the IPO or is it a bust, the SpaceX IPO? One of the things that's happened repeatedly over the last year is that many professionals were worried about the market, and retail came in and bought the dip and they made a ton of money. So like there's a conditioning now that when that's happened, they're stepping in and buying the dip. I don't know if they'll buy the SpaceX IPO for all of the cautionary, discussion around the valuations. It's difficult, right? I mean, it's kind of creating a behavioral pattern.
I brought up the possibility last Friday that, what if it's not a good IPO, fails?
Oh, what does that mean for market sentiment?
Yeah. It's outside of my wheelhouse. So
yeah, there's no, I think a lot of people are skeptical that the bankers, the amount of money that people are lined up to make on this, it's hard to imagine they're going to let that thing fail. I mean, IPOs are kind of structured to pop and be successful.
Yeah.
The test is how
they're structured to dump shares on the public while the owners cash out.
Well, retail is the exit liquidity for the private market, right? I mean, I heard someone say that, and I think that's a really good explanation. I don't think anyone's telling you any different. I
heard they're hardly keeping skin in the game with this kind of offering price. At most IPOs, there's still a big holding by insiders. And this is a pretty good exit because, there's no history. Most are businesses that build up, that show profits, and then go public. This is a cult play, in my view. It's just my opinion. And it's interesting, and we were talking about it before the show. And I don't know, you said, well, maybe they're doing this so they could buy SpaceX. But you know what? Tesla broke down today.
Yeah.
Well, this was another failing rally. Yeah.
Are people swapping out of Tesla to get into SpaceX? I think that's been part of the chatter. We don't know.
But this looks like it's going to take out 340.
I will say that that people that I've spoken to, just so we're even keeled here, because we're not telling people whether to buy the IPO or not. You've got to
No,
you know your own your own risk tolerance and cash supply and when you'll need the money and all of that. So
you
you're
know
not
why
going
I
to.
don't? And maybe I've missed out on becoming a multimillionaire. There's no chart.
Yeah,
Show me price history. It's one candle.
one
Friday.
candle.
One candle.
We show you price history all the time on the fly, Dale, and you do. But I have heard the sort of optimistic take that, and you've seen, I think, Ron Barron talking about the satellite business and what he thinks that can turn into. And I think we've gotten a little taste of Starlink, so
Yeah, it's
that seems
great.
tangible a little bit more than if you're skeptical of, colonizing Mars or something. So there's a lot of enthusiasm around that. And so I think that's what people, and the other thing people will say is they're not making a decision on a week or a month, or this is a minimum 3 to 5 years. And Elon operates on a forever time. He's a very long-term thinker. So if
And
that aligns with you, then you're closer to answering your own question about whether this is something that you're interested in. But a lot of people
go the track, Maggie. Who
Yeah.
did they bet on? They bet on the jockey.
Yes.
This
Yeah.
is a bet on the jockey.
It's the bet on the jockey. That's right. And other folks are just saying, let it trade for a little bit and see what happens. Let a little bit of that initial. But it's interesting to your point, Cosmo. Timing is everything, right? I mean, there have been IPOs pulled because of market conditions. So you have this happening, and remember, Anthropic and OpenAI behind them. They're not the only ones. There's a lot of issuance. Hey, real quick, Dale, speaking of, I forgot to ask this question. Somebody mentioned it earlier. We have a lot of Treasury supply coming on the market. You mentioned it's going to be a really important Fed meeting next week. We're hearing from Warsh for the first time. What are you looking at for TLT for Treasury rates?
Well, they had an oversold bounce and they don't look great. You have a confirmed low, and I still think, regardless, even if we get a pullback to 435, something like this is not the high at 470 in the 10-year. I'm still looking for over 5%.
Watch out. If you get oil moving higher, 10-year
dollar higher, rates higher, everything else lower.
That's not a good combo. That's not a good combo for equity markets, but we shall see. Yeah. Dale, loving the midweek update. We love it. There's a lot to watch. Paul said we're betting on our jockey, Coach Dale. But it is fun because we're right in the thick of everything that's going on. So we've got more inflation data coming. We've got the big IPO and Warsh next week. So we'll see what happens. We'll see you back here same time next week.
And it'd be harder for the horse to run with me sitting on it. Okay.
I bet we can find one. Great stuff. Thanks for everybody for joining. Enjoy the rest of your week. Good luck. Take care. We'll see you again next week. And watch for JJ's piece that's releasing tomorrow and or Friday, depending on where you catch me. All right. Take care.